Circle Internet Financial, ticker CRCL, has become the surprise rocket of the 2025 stock market. Let's be honest. A 600% gain in just weeks is almost unheard of. But before you dismiss it as just another crypto mania, take a second. Because Circle is not some random meme coin company. This is a financial tech business that has quietly spent over a decade building its place in the digital economy. Let's take a step back and meet the company. Circle was founded in 2013 by Jeremy Allaire and Sean Neville. Their early goal was simple but ambitious: make money move across the globe as fast and freely as email. It took years, but Circle eventually launched USDC, the stablecoin pegged to the US dollar. If you've traded on Coinbase or used DeFi platforms, you've probably seen USDC. It's not a Wild West crypto token. USDC is meant to be boring, stable, and 100% backed by real money. Today, USDC handles billions in volume every single day. It's used for everything from payroll at tech companies, to cross-border B2B payments, to charitable relief in countries facing inflation. And here's a wild fact. USDC has been used in more than 190 countries, sometimes even more reliably than local currencies. But for years, Wall Street was hesitant. Crypto had burned too many investors. Think of the FTX collapse, the Terra Luna implosion, hacks and rug pulls. Would stablecoins survive? Could any company truly make a digital dollar safe enough for banks and governments to trust? This is where the story gets interesting. While most of the market was still licking its wounds, Circle was working behind the scenes. In 2024 and 2025, they spent millions on compliance, audits, and building relationships in Washington, D.C. Jeremy Allaire himself met with regulators, testified in Congress, and even worked with the Federal Reserve. Circle's pitch was simple: give us clear rules, and we'll build a stablecoin that the world can trust. Enter the Genius Act, passed in June 2025 by the Senate after years of gridlock. This wasn't just any bill. For the first time, Congress agreed on strict federal rules for stablecoins. Every USDC issued must be backed, dollar for dollar, by cash or short-term treasury bonds. Circle is required to publish monthly audits and undergo regular regulatory checks. No more, "Trust us, bro, everything is out in the open." Just as important, the bill declares that regulated stablecoins like USDC are not securities and not commodities. This wipes away years of confusion and potential lawsuits from agencies like the SEC. The crypto fog had finally started to lift, and almost overnight, Circle's stock price went ballistic. Let's talk about why. First, this law gives Circle and USDC something no other stablecoin had: the US government stamp of approval. That means USDC could be used by traditional banks, payment networks, big tech firms, maybe even government agencies. Imagine Visa, MasterCard, or Shopify integrating USDC. Imagine payroll companies letting employees get paid in USDC instantly, anywhere in the world. Analysts estimate the global stablecoin market could be worth over $500 billion in just the next year or two. Circle is perfectly positioned to take a big share, but there's more. Circle isn't just sitting back and counting its coins. They've launched the Circle Payments Network, a new system that lets businesses move money instantly and cheaply, 24/7. It's not just hype. Real companies are signing up. From fintech startups to Fortune 500s, the promise is the same: faster, cheaper, more transparent payments than anything the old banks can offer. That's a massive disruption. Now, let's look at some numbers. In the last reported quarter, Circle's revenue jumped to $579 million, up more than 50% from the year before. Unlike many crypto firms, Circle is profitable, reporting positive net income and a solid cash position. Wall Street has noticed. Major funds like ARK Invest and Fidelity are big shareholders. Some analysts are calling Circle the next PayPal, or the Visa of crypto. One even gave the stock a $235 price target, even after the giant post-IPO run. But here's where it gets even more interesting. There's a real human drama behind the headlines. Passing the Genius Act was not easy. Lobbyists from banks, tech firms, and crypto groups all wanted their slice. There were late-night meetings, political horse trading. Some lawmakers saw stablecoins as a threat to the dollar. Others saw them as America's ticket to global fintech dominance. When the bill finally passed, it sent a signal to the world. The US isn't banning stablecoins, it's embracing and regulating them. But every story has two sides. With this much excitement, there are huge risks. The Genius Act isn't law yet, it passed the Senate, but still needs to clear the House and get the president's signature. Anything can happen in politics. If the bill is delayed or changed, Circle's momentum could slow. Plus, there's global competition. Tether's USDT is still the world's biggest stablecoin, and it's growing outside US regulation. Banks and even tech giants could launch their own digital currencies. And let's be real, the crypto industry is famous for surprises. A hack, a regulatory crackdown, or a sudden drop in interest rates could hammer Circle's profits or reputation. For example, Circle makes a lot of money on the interest from all that USDC reserve cash. If interest rates fall, their income could shrink. And while USDC is audited and regulated, no system is perfect. One big security breach could trigger panic withdrawals. Valuation is another big question. CRCL is now trading at over 9 times sales, a level usually reserved for high-growth tech giants. This means investors expect Circle to keep growing at an incredible pace. If they stumble, or if user growth slows, the stock could fall just as fast as it rose. There's not much margin for error. So, what happens next? Here's where things get fun to imagine. Picture a world in 3 years where USDC is used by banks, by payroll companies, by online shoppers from Argentina to Vietnam. Or, picture a scenario where regulation hits a snag, or competition heats up, and Circle has to fight tooth and nail for every customer. Which way will it go? Only time will tell, but right now, Circle is in the spotlight. Investors are betting on its vision, its technology, and its newfound regulatory blessing. If you're thinking of investing, keep an eye on these 3 things. First, does the Genius Act make it through the House unchanged? Second, does Circle keep winning big business partnerships? Watch for news about Visa, MasterCard, or major banks adopting USDC. Third, can Circle defend its lead if Tether, banks, or even the US government itself launch competing stablecoins? The Circle story is far from over. Whether CRCL will keep soaring or face a reality check is one of the biggest financial questions of the year. If you're as fascinated as I am by the intersection of technology, politics, and money, you'll want to watch this story unfold. Would you trust your money to a stablecoin? Do you think Circle can keep its lead? Let's see what the future brings. So stay tuned. Like, subscribe, and leave a comment.